morning. Nothing dramatic, it has to be said, but nonetheless, at the back of this OPEC turmoil, prices seem to want to rise, at least in the short term. Let's kick off this morning with Robin Mills, CEO of Kamar Energy, sitting here in Dubai with a very front row seat to all of this drama. Robin, just generally your thoughts on this whole OPEC fallout. It seems to be, if we're not reading the tea leaves incorrectly, but very much a disagreement between the Saudi position and the UAE position, which would usually be well aligned. Your thoughts?
Yes, thanks, Sean. Morning, everyone. So, I'd said back in September that this crunch point was going to come. Perhaps it came a bit earlier than we expected, but there was always this problem with the deal as it went on and on, that the quotas that each member had were going to get out of whack with what they could actually produce. And the UAE is the leading example of that. And so the UAE has kind of moved first on challenging the structure of the deal. And the UAE has basically said, well, we agree with the need for a production increase. And I mean, I personally think the 400,000 barrel a day increase each month is actually not enough. It should have been more, but at least there was an increase on the books. Everybody agreed with that. But the UAE was not happy with extending the deal from April next year to the end of next year, unless its quota got re-examined. And the UAE says, we have a third of our production capacity unused. That's far more than anybody else. We've increased production capacity, and that should be properly recognised. On the other hand, you've got other members who couldn't even produce their quotas, like Angola. So, when the deal came up to April or sometime before, there had to be a reckoning and a reset of that to recognise this situation. But of course, that goes against a lot of members' interests, and so it was inevitably going to provoke a confrontation.
Robin, have you identified anything as to why now? Why is the push for the extension being lumped into this meeting? Is there anything that is about now that makes this a sort of urgent matter to deal with?
Yeah, I don't see any particular urgency now as opposed to last month or the next month. I mean, obviously, this meeting was about setting the path forward, and we had the 3-month kind of phase deal had reached its end. So this is the next step. But no obvious reason why it was so urgent now rather than a month or two down the line. But the longer they wait, of course, the more urgent it becomes, because otherwise you hit April and then there is a big bust up and there's no time to sort anything out. That could be that's looking ahead. But is there any immediate trigger why there had to be this confrontation this month? Not obvious to me.
Let's leapfrog over to Sydney, Australia, with Peter McGuire, CEO of XM Australia. Peter, from a market perspective, what's at stake at this moment, this Tuesday morning?
Well, good morning, Sean. Good morning, panelists. What's at store is that we're approaching 80 with a a great degree of horsepower, Sean. So there's this first side as far as from a trading perspective. Very, very bullish. I think the undertones are there, and I'm seeing NYMEX is 76.70. So you've got and closing very closely on Brent. So the momentum there, US dollar still sitting at that 92.2 handle. I think could be a little bit of further softness for that dollar, so that could even push crude up a little bit closer. And I won't be surprised to take an $80 handle out for Brent this week.
Peter, ultimately, is this as I put it on Twitter, is this a bear in bull's clothing, that the initial reaction is clearly bullish, but for a market that's a managed supply market propped up by keeping 6 million barrels on the sidelines, if you've got fallout, it can't be bullish, can it?
Well, I think you're probably right, Sean. I think it's probably a little bit exhausted when you're thinking about what the headline's going to be. There's so much hurt going on with developing nations and the emerging economies, and inflation sitting where it is. Everything's up except wages. So in turn, there's a lot of hurt on Main Street. The second part of the journey is that I think 80, 81, 82 bucks would just about pull it up. I think OPEC are very mindful of it and that consideration. So I think we're nearly at the tail end of a bull market. And as you said, we could see I'm not saying a significant correction to the downside, but you could strip out $5 or $10 real quick.
Let's go to Omar Al-Obeidly, Director of Research at the Bahrain Center for Strategic International and Energy Studies. Good morning, Omar.
Morning, Sean.
How big a rupture is this in terms of the Saudi UAE relationship and then maybe the wider OPEC plus family?
Well, first of all, I think just to add to what Robin and Peter mentioned, this was expected in the sense that at some point there was going to be a discord between capacities and quotas. And the reason this hasn't come up before, and by before I mean in the last few years, is that prior to 2016, when OPEC had this sort of renaissance, historically compliance rates with quotas were basically like 2 or 3%, and the only country complying was Saudi Arabia. So this was never an issue because everybody was basically producing as much as they wanted, except for Saudi Arabia, who for geopolitical reasons would withdraw on capacity. Since 2016, we'd had an unexpected high level of compliance by countries. Then that's obviously extended to OPEC plus. But they've never had to, in the past, institutionalize how to deal with what happens when compliant countries increase their capacity, production capacity. Now, because this agreement has been going on and off basically for 4 or 5 years, that's enough time for investment cycles to mature and for capacities to be changing among compliant members, not just Saudi Arabia. And so this was, so I'm actually a bit more positive in the sense that, okay, there's going to be there's been strong words exchanged and there's been a tempers have fled, if you will. But this is a normal process in pushing the members to develop a coherent institutional framework for dealing with production capacity changes. That hasn't really existed before. There's a need for that. So they all need to sit down and come up with a system that takes into account investment horizons, so on and so forth. In terms of the broader relationship, I don't think it's going to make much of a difference. Saudi Arabia, in its energy policy, for example, has been very capable of compartmentalizing energy and not letting it affect positively or negatively its other geopolitical relations. And the most clear example is the relationship with Iran in OPEC. And I believe actually the Prince Abdulaziz, he gave a fond farewell to the outgoing Iranian oil minister, I believe last week, if I'm not mistaken. So Saudi Arabia has a very professional and mature oil policy and has a long history of being able to allow that to operate without affecting other bilateral and multilateral relations.
Wow. Okay. I'll let that sort of come by pass, Robin. It sounds to me a very positive spin by Omar. Ultimately, I don't think I've heard a senior Saudi be quite as dismissive as he was yesterday, Prince Abdulaziz, on television about the UAE's claim to have this extra capacity, as he sort of described it dismissively. You don't build your house on kind of 1 month production or whatever the words he exactly used, but it was quite strong and quite dismissive of the UAE position. How do you see this playing out, Robin? Is it a short-term storm in a teacup, or does this drag out for weeks? It's hard to see where the coming together is at the moment.
Yeah, it's kind of an interesting comment from the Prince because, the Saudis and Russia were assigned an 11 billion baseline, of course, based on nothing, particularly in the Russia's case, that they haven't even demonstrated they could produce that. So that's part of the UAE's beef with them that, how come they get 11 million based on no evidence and we get a much lower baseline, which we have actually produced, if only for a month, plus the subsequent capacity increases. So I think that's part of the problem. But I think to your wider question, John, how long does this drag on? Well, what is the resolution to this? The ultimate resolution is uncomfortable because quotas have to be adjusted, and some people will lose out. There's obviously the option of kicking it down the road, and hey, by April the market may look very different. Maybe the market is so tight that everybody can produce a lot more anyway, and the situation resolves itself that way, or maybe the market has weakened significantly and people are everyone's in a bit more of a mind to be more reasonable. So things could change either way. That's probably the typical OPEC response, just to try and put this off and appoint a committee to look into it and recommend changes and delay it that way. Otherwise it's problematic, right? Because otherwise they either carry on with no increase in production and the market gets increasingly tight and maybe sets itself up for a crash. Or they continue with this no increase, and then countries start cheating and start thinking, well, why am I complying 111% to these quotas when the market's paying me 80 and 90, who knows, not dollars a barrel.
I mean, as you extrapolate what's at stake here, Robin, obviously the immediate oil market, the immediate oil price direction, but if the dominoes fall and fall, this is not the first time we've heard soundings of this sort of show, if you like. We had 6 months ago the reports of the UAE looking to leave OPEC. There was issues around that. Was there, anything really substantial at that time? But clearly there was no smoke without fire. I'm just wondering, from your point of view, as you extrapolate this now, a few days ago, the brightest minds that we have on commenting on the world oil market said, "Oh no, this will be sorted on Monday." Clearly, this is not sorted on Monday, and there's no new date announced for this meeting. So I'm just wondering, from you extrapolate where this goes, is OPEC at stake here? Is UAE's involvement at OPEC potentially at stake here? Where do you think the sort of the bigger picture is on this issue?
I don't think OPEC's at stake. Every time OPEC has a disagreement, we'll see obituaries for it. But no, I think, look, OPEC and the OPEC Plus framework has proven that the advantages that they have over the past year and a half or so. The UAE position is interesting. I mean, obviously Qatar left a couple of years back. It's a small producer, but a historic one. I think the discussions over the UAE's leaving OPEC are genuine, but a very extreme measure, and I would be surprised if it gets to that. However, it's good for the UAE's negotiating position to have a threat on the table, and that kind of threat is a very serious one. UAE is now the third largest producer had third largest capacity within OPEC, not that far behind Iraq now. So a very major player, and to lose a historic member and a large one would really be serious. So that does give some more credibility to their arguments.
Peter, meanwhile, back at the ranch of demand, our good friends in China seem to be stumbling a little bit as we go into the second half of the year. We have China's services sector reporting yesterday they've expanded at the slowest pace in 14 months in June, with the sort of PMI business activity dropping to 50.3 from 55.1, which is a significant pullback. Your thoughts on what's going on in China and the outlook for the second half of the year?
Well, first off, Sean, and yes, it's a big wind back, but the Chinese economy, what we've seen as far as equity markets, they've been very, very bullish. So is that momentum going to stay to every trader's delight on that, the big bull market, or is we going to see some sort of disruption? And that just has to play out over the next couple of months, how Asia positions itself as far as equity markets. The second part is demand. Well, the global demand, they're saying, is going to increase by considerably, about 5 million barrels a day over the second half of the year versus the first half. So the demand picture, someone somewhere is using it, Sean. I'd say that China's probably at the top of the ladder, and the demand picture is going to be, I think, fairly strong leading into 22. If we're coming out of lockdowns, I hear what Johnson said this morning, Boris that is, and the UK seems to be ratcheting up. US, everyone seems to be coming out of lockdowns. Europe. So in turn, from a demand side, I think it's going to be fairly rosy leading into the next 1 or 2 quarters, as long as we don't see a return to lockdown, Sean.
Even on that point, I mean, we were talking last week that even at 400,000 a barrel a day increase per month, it was likely to get to 80. Your thoughts on Robin's assessment that in itself was probably a low figure given the demand recovery that we're talking about in the second half of the year?
Well, I think if we put our minds back a couple of weeks ago when we've been, chatting with GI on our weekly or bi-weekly commentary, 80 was really the handle that everyone thought was possibly an achievable, and how soon are we going to get there? And here we are, we're sitting here on the 6th of July and we're only $2.50 out. So we could easily be there. Many analysts were saying possibly by the end of July or moving into August. So we're probably ahead of the curve. I think it's just a wait and see, but I think that overall momentum is to the upside at the moment due to the brinkmanship being played out between UAE and Saudi. So I think that's enough to add a couple more bucks on it quickly, Sean.
Omar, just coming back to the wider context of the regional situation, in the last few months, obviously the last 12 months perhaps, we've had the sort of Saudi and the UAE kind of move in different directions on Yemen. We've had the peace agreement with Israel and the UAE and Bahrain and and Israel. We've had even just the other day, it seemed coincidental perhaps, but nonetheless, given everything, timing, the Saudis block all Saudis from traveling to the UAE because of the COVID issue. I'm wondering, from the wider point of view, is this situation on OPEC separate from all of that, or is there a big picture here that is making this relationship not as harmonious as it used to be?
I think the OPEC one is just a coincidence over time. I mean, Robin mentioned that this has been on the cards sooner or later. It's just a coincidence that came up now. In terms of Saudi and UAE interests, obviously, as you mentioned, there are several areas where interests have not been as mutually consistent as they have in the past. But I don't think that that's a major cause for concern, because if you look at it, first of all, the Middle East, sadly, tragically, most of the time when there's conflict in the Middle East, we talk about conflict leading to violence, to wars, to direct military confrontation. The kind of conflicts we're talking about here between the between UAE and Saudi Arabia are things that are pretty low scale things, and there are things which are totally resolvable with a few diplomatic exchanges. If there's something, for example, one of these flashpoints was Saudi Arabia insisting that companies that want to have the regional headquarters have to have been in Riyadh if they want to serve Saudi government. So that's something which is very, very, very low down on the security threats priority list, compared to all sorts of other far worse things that are happening.
So ultimately, this OPEC part of the OPEC sort of disagreement we don't need to see everything be resolved in order to find a resolution.
Saudi Arabia has a long history of compartmentalizing its energy issues, and I expect that to continue if they can negotiate happily with Iran and Iraq and Libya, historically, and all sorts of other countries. I see no problem there. Just to bear in mind, as I say, that it is on slow media days, it's easy to blow some of these differences out of proportion. Obviously now in Asia, social media, but in general, these are things. Similar things happen in the European Union on a daily basis. It's just the difference is they have a more institutionalized process for dealing with these conflicts. But French and the Italians and the Germans have all sorts of minor border differences and policy differences, but it's just become part of the daily news cycle, and they just don't catch people's attention as much.
Robin, the immediate outlook this week, of course, is the OPEC meeting was to take place in early July, so that the OSPs for Saudi would be ready to go in the coming days. And now we're going to go into the nominations without this deal. What's your outlook for that, and what will it tell us?
Yes, I think, well, absolutely. I mean, they're pretty almost out of time on reaching any decision that would affect production increases next month. So, and even dragging it to Monday was causing trouble there, of course. And the Saudis saying, well, no date has been set for any further meetings. So presumably if that doesn't change, the next meeting would be scheduled the following month, which means a month of no increases. I think it depends what diplomatic movement we see over the next few days, though. The 400,000, okay, so that isn't coming, presumably, but there could be an 800,000 increase in September, I suppose, to catch up if necessary, if there is a deal or at least a compromise reached of kicking the decision down the road. But we've seen both sides pretty much talking their book pretty determinedly, and being quite a bit more open about it. It's not all behind closed doors like it might have been in the past. That's pretty interesting. So we'll just have to wait over the next few days, I think, to see what comes up. I think still my bet would be on some face-saving compromise for now. But Prince Abdulaziz has been known to dig his heels in, as he seems to be doing here for now. So
Is this all bullish, do you think, as long as it goes on, that this impasse is just delivers upward momentum to the oil price? And with that, it would seem it takes the urgency away. If you're winning both ways, right, you're getting more money.
Yeah, short-term bullish, but longer-term bearish, I think, because the oil price, look, if there's no production increases, the oil price will go quite a bit higher. You know, it'll go into the 80s, maybe even more. And at that point, look, some of the members of the deal will start cheating. Will start under complying. You know, Iraq, I think, will be ready to go. And at some point, the UAE may also say, well, you know, we can't reach a deal on increasing production, and we have our spare capacity, and we're going to use it. And at that point, of course, everybody may go back to producing at maximum. Deal falls apart, prices crash, and then after a bit more pain, perhaps they get together and thresh out a new deal. Yeah, and historically, these realignments of quotas have always been difficult, and there's always a bust up, and often they're only achieved because the price has crashed, and the countries feel they have to come together.
Let's go to the survey question and give everybody in the room a chance to comment on this theme. In a market that is built on a house of managed supply cards, is OPEC plus fallout bullish or bearish for oil prices if it lasts weeks rather than days? So welcome your thoughts on that. Is this bullish or bearish if it lasts weeks rather than days? And let's go around the table. Peter, we've had the U.S. Biden administration for the first time mention OPEC in a sentence. Nonetheless, it's got his attention or the administration's attention, i.e., sort this out. Do you think that brings any bearing? Is this oil price starting to get to a level that is of concern to even the U.S. economic recovery? We're seeing gasoline prices across America during the summer driving season at close to $4 a gallon.
Yeah, exactly right, Sean. That's the hurt and that's the pain that Main Street is feeling. So whilst producers are rubbing their hands with glee, the consumers are really hemorrhaged a little with $4 a gallon. And that's, I think, not what Biden administration want for the US consumer. And they're, I think, realizing, the new Green Deal and what's happened as far as shale and all of that. I mean, that's got to turn back on to some extent. You would think that these guys would be also rubbing their hands with glee, thinking, well, hang on, we've got to really start, making some good money out of this.
Peter, looking at just the other issues resonating in Asia, before we came on, we were just chatting about the resurgence of the next wave of COVID infections, obviously Australia included. Vaccination rates continue to be quite disappointing across Asia. What's your outlook for the balance between those two things, more infection sort of breakouts and the vaccination rate remaining relatively low?
Well, I'll go to the vaccination first, Sean. There's hesitancy across Australia, but maybe it's only too early, but there is a degree of hesitancy. There's a degree of hesitancy in some parts of Asia. So there's that's how that plays out, no one really knows. And I think as the year rolls on, more people will be putting their arm up for the jab, but it's just very much, again, a work in progress.
Is there just on that point, is there a kind of a public sort of campaign to encourage people to take the vaccine? I suppose when infection rates are so low and you lock down just when you've got 10 or 20, I mean, we live every day here in the UAE with 2,000-3,000 and it's sort of part of normal life.
Yeah, very much so, Sean, because Australia's been quite unique, and certainly the East Coast, Sydney, Melbourne and Brisbane. Sydney, we had a lockdown last year for a month or two, and then this is our second week of a lockdown. So it really hasn't affected us. And I've got to say, no one's really walking around with masks on. I live at the beach here and I look over there's the Pacific. People are out there walking now. If it's a lockdown, then it's a lockdown. But really, I don't think it's really having a great impact to our domestic economy. So there's the first part. The second one is how that rolls forward. The uncertainty, again, economic recovery. There's these are uncharted waters, Sean. We've got equity markets at all-time highs. We've got crude going very, very well for producers. We've got the US dollar still sitting at 92, interest rates record lows. Everyone's rubbing again. Traders are having a dynamite time over the last 3 to 4 months. And I think that will continue for the next 3 or 4 with, again, plenty of opportunities.
Omar, just in wrapping up, clearly putting everything else aside, oil prices, as Peter mentioned, at near $80 a barrel is a great economic support for the Gulf, Middle East countries, Middle East producers in achieving a fiscal recovery. What's the impact does that have as a sort of guiding North Star for a lot of these decisions they need to make?
I don't think at the moment it's going to have any significant impact because it's deemed as something as being quite fragile. Whether they push the can, whether they resolve it or push the can down the road or whatever they do, I don't think anyone, you said it yourself in your tweet, this is a bear in bull's clothing. So until there's some, consistent and robust evidence that this is going to be a sustained increase, which clearly has not materialized, I think that the Gulf countries will continue to try to aggressively fiscally downsize where possible, and you've seen that in Saudi Arabia, where they continue to. There's been a new tranche of labour market reforms attempting to address the issue of youth unemployment, and while it may be some temporary increases in expenditure as they take advantage of higher oil prices, I don't think there'll be any planned permanent increases until something more tangible appears.
Omar, the other point I wanted to get your views on was the sort of Iran-US nuclear agreement that has not yet happened. There was a lot of belief that it would be the major issue in the oil markets going forward, new supply and so forth. It looks like that's all sort of pulled back at least. What's your outlook for that in the second half of this year?
So I think that the Biden has telegraphed pretty much as clearly as possible that he wants a deal, and that he foresees this deal as a sort of a goodbye to the Middle East from the US's perspective. He wants to get the deal done and he wants to leave. And even if the US, quote unquote, gets its pants pulled down over the deal, that's not a problem because the priority is just getting out and moving on to greener pastures from the perspective of the US foreign policy establishment. So I think that there may be some hiccups here and there along the road. There may be some, but ultimately the deal will be done, and that will then subsequently present challenges to oil markets. But I think that much more important than any direct impact on energy markets is the big question mark over the impact on regional security. Here you've got two sides. On the positive side, you've got claims that US pulling out is encouraged countries which have been traditionally adversarial to reach out to each other to try and establish some sort of norm. You got a negative side which is saying this is going to permit Iran to engage in further fund, I should say, activities which have been deemed by other countries as being totally unacceptable. I don't think anyone has a clear sense of which the positive or negative is going to play out in the end, but I think that will have a much bigger impact on oil prices in the future than will the production, because regional security is
absolutely. Let's get the survey result and give Robin the final word. I know, Omar, you need to jump off sharp at 11, so thank you. In a market that is built on a house of managed supply cards, is OPEC fallout bullish or bearish for oil prices if it lasts weeks rather than days? Bearish just by a nose. Robin, you get the last word on this today. Your outlook for the rest of this week, do you feel this gets any kind of resolution, or it drags now because the window essentially has been missed for August?
I think it'll drag for now because the two sides won't want to come running back to the negotiating table immediately and appear weak or appear desperate. So I think this discussion, even if there'll be further discussions, of course, but any resolution probably now has to wait into August. But I think, look, the bigger picture thing here is we talk about a tight market. The market's only tight because OPEC supply restraint has been so good. Otherwise we're still well down on demand. Demand's coming back, but it's got a way to go. Flights still well below 2019 and so on. And the other side of the bigger picture of this is just all the side of the competition. We keep hearing that shale isn't coming back, but look at $80 prices, shale looks good. And these guys at some point will start drilling, and at some point shareholders will start seeing good returns, and growth will be back in favor. That might not be this month, it might not be next month, but we know the oil business, and we know that will eventually come. And leaving prices well in the high 70s or above that for a long period, as I've consistently said, I think is dangerous.
Well, let's wrap it up there. I think it'd be also interesting to pay attention today with the US markets back open after the July 4th holiday weekend, because I think so far the market response to this impasse has been relatively subdued. Okay, we're moving slowly but surely up to 80, but I think we were doing that anyway. But if the markets open in the US today and take any kind of a more dramatic reaction to the news of OPEC's fallout, then perhaps that brings a bit of pressure for immediate issue to be dealing with this issue on a more immediate basis. Otherwise, I think we're going to have to wait till the August 1st meeting to see this solved. Thanks, Peter. Really appreciate you joining us from Sydney. Robin, as always, from Dubai, and Omar from Bahrain. Thanks, everybody, and have a great day. We'll catch up in the coming days. All the best. Thank you.
Thank you,
Sean. Thank you.